I'm here with Jake Reynolds, Asset Management Director at Courtiers, and James Timpson, Head of Asset Management, to find out what happened in markets and in the Courtiers funds in the last quarter of 2024. James, it looks like Q4 took a slight bite out of the annual returns in the Courtiers funds. Can you tell us a bit more?
Yeah, so even though historically December is actually one of the best months for market returns, markets just faltered a bit towards the end of the year last year. So the funds had their only negative quarter of the year, but their returns for the total year in 2024 were still comfortably positive. So the growth fund returned 7.9% during the year, balanced fund 6%, and the cautious fund 3.8%. So even though markets did falter a bit towards the end of the year, it was still a nice positive year overall.
Jake, November 5th, US election. What happened there? How did that impact on the quarter?
Yeah, big event, and as we alluded to in other updates this year, this was one of the unknown ones. Like the France election was unexpected, and then that had a big impact on European markets, whereas UK, known outcome, it plays out as expected, and therefore markets are pretty normal, pretty flat. This one could go either way. People had sort of digested what maybe a Harris presidency looks like and what a Trump presidency looks like. Then eventually Trump secured office for the next 4 years. Initially, the market impact globally was really good. However, particularly in Europe, as they digested what another 4 years of Trump may look like, maybe tariffs, then they retreated later on. So it meant that US was really the only market up. And that carried on into the quarter, right up until Donald Trump rung the bell at the New York Stock Exchange on December the 12th. And since then, they've actually given back some of their returns. So they're up 2.4% over the quarter.
So all considered, are you comfortable that where clients' investments were during the final quarter, you're happy how it all rolled out and you wouldn't have made any other decisions looking back?
Yeah, it's been a continuation of capital flowing into the US. It's putting valuations at record levels. The dollar is at record levels. This was a big mover in the quarter. The dollar strengthened as all this capital flew back into the US after these fears of tariffs and what Trump might mean for global trade. And it actually strengthened 7.7% against the pound, 7% against the euro, nearly 10% against the yen. So dollar a big mover in this quarter. We're trying to take the sting out of that, of a reversal of that for clients and remain about 60% hedged on GBP.
Working well?
Well, it worked a lot better in the Q3 when the pound strengthened a lot. But it's about managing the risks and where we see them. Ultimately, currencies in the short run are going to be, you can't predict them, they're going to be a random walk, but you can see where they are relatively to other currencies. And when they're really expensive, you need to make sure that you're not buying in on those really expensive valuations. And you can do that in clever ways. So one index track could be a real effective exchange rate, where you look at the exchange rate, not just with one currency, but with a basket of currencies and then adjust for inflation. And that's sort of what The Economist does a bit more tongue-in-cheek with the Big Mac index, where it looks how much it costs to make a Big Mac in each country and sell it and stuff. But the real effective exchange rate is a bit more technical, and you can track that, and you can see the dollars at a record level on those indexes.
Before I look into 2025 and get your thoughts on that, James, interest rates and inflation, how did that impact on the final quarter of 24?
Yeah, so this was the big story in December, really. And I actually mentioned in one of the Q&As at the client seminar, we were talking about interest rates, and I said that Jerome Powell, who's the chairman of the Federal Reserve, all he has to do is open his mouth and make some vague comments about interest rates, and markets can react quite heavily. And that's pretty much what happened a few days later. So at their latest meeting, they did announce a rate cut, but Jerome Powell also said that they were entering a new phase in 2025, which would lead to them being more cautious about rate cuts. And the market took that to mean there could be fewer rate cuts next year, and they reacted negatively to that. So that's why we saw that big market downturn in December.
Jake, anything to add on that?
Yeah, I think, the latest inflation numbers, James put out a fantastic chart showing that it's one of the most cared about things by people, and still to this day, because of where we were 2 years ago. But we're not where we were 2 years ago, when the last time we saw two consecutive months of increased inflation. Inflation was above 11%, and we're only at 2.6% now. So we're still it's a much more manageable number. So it's as James said, he nailed it perfectly. It's not as much to worry about as it was 2 years ago.
Great, so nothing to worry about. On to the back end of 2024, James. Is there anything Courtiers invested in, hopeful that it's going to take us neatly into 2025?
Yeah, we're always on the lookout for more long-term investments. And in the last year or so, we've been expanding our emerging market portfolio. We're looking for all sorts of opportunities in emerging markets. And in fact, last month, we made our first ever investment in a stock from the Chilean stock exchange. So that's sort of diversifying our emerging markets portfolio even more. We've got about 17 stocks now across 6 or 7 different regions in emerging markets. So we're hopeful that we're going to see some nice, strong returns from emerging markets over the next year or so.
And Jake, am I right in thinking that clients can see across the world where their money's invested?
Yeah, well, it's one of the beauties of our integrated approach is that you get updates from the fund managers like these. You're able to ask your advisors questions to put to us, and we will get in front of you when we can and answer your questions, and you can go through and see exactly how many pounds of each of whatever wrapper you're in, ISAs, pensions, general investment accounts, goes into each investment on the online platform.
On the PFP?
On the PFP.
If you're not yet registered for the PFP, speak to your advisor and they can help you get logged on. So to close, Jake, I've asked James, is there anything that you've got your sights on now or as we move into 2025?
Well, we were always busy. We've got our asset allocation next week. It's monthly, and we're going to be some interesting discussions in there as always. But it's about positioning for not 1 year. It's about positioning for 10 years. And there's just I hope we stress that at the client seminars. There's so many opportunities out there. So it's been a really exciting time to be an investor.
Jake, thank you. James, thank you very much. If you have any questions, please do speak to your advisor or contact us through the website, and we'll get them to the right people. Thank you.